the Fed has been tapering off their treasury supply, right? Essentially doing QT. If you actually look behind the hood or below the hood, you see that all things aren't really equal in terms of prior quantitative tightening cycles. The Fed in this cycle did not sell on net anything past 10 years, meaning, during the QE run up, they bought a ton of bills, they bought a ton of notes, they bought a ton of bonds, 10-year, 20-year, and 30-year bonds. And then during the taper, and I have a chart for this, and I can send it to you if you want to display it on the screen now, where when they started the taper, everything past 10 years, they actually did not sell any. In fact, they kept increasing their holdings of the 10-year, 20-year, and 30-year bonds while they decreased their holdings of bills and notes. And so this meant that on the surface, while their overall size of their balance sheet continued to decrease, the actual holdings of bonds remained high and continued to climb. And so that meant that, in my opinion, right, the Fed understood that they could not lay off this amount of bonds without causing yields to completely blow out. And so they did this intelligent, behind the scenes, you could call it stealth liquidity, where while they were tapering, they just ensured that they didn't sell any of the long-term bonds and in fact bought more to provide support for the bond market. And the reason why this is important, of course, is because of duration risk, right? Banks can much more easily hedge against a short duration bond than a long duration bond, just because a long duration bond has much more interest rate risk than a bill, for example.
Right. Yeah, I definitely saw that this week. We could see some of the reports on that. Now, that's the dilemma. That's sort of where we're at, and we can just frame it up with the rock of the hard place, right? Do we keep printing? Do we keep manipulating? And if so, how long can that last? But maybe that leads us into the next big topic, which is the tariffs that we have so far. A couple of things that you mentioned. One was that, we had these insane tariffs, 145% against China and then 245% against China and things like that. And you mentioned, I forget the exact word you used, but, Trump backtracking or coming off of that, right? A lot of the mainstream media headlines that you would see are like he's caving or things like that. But from an analyst perspective, did you ever think it was realistic that, of course, we're going to have 250% tariffs against China and that was never going to come off? We'd never do trade with them again? Or was it always that was going to be sort of that negotiation point, the anchoring, if you will, to allow us to come back off of that into some negotiation?
I think it was basically like a retaliatory, almost like show of force, right? It was a chicken game, if you will, of two cars racing at each other.
Right.
And Trump thought that he held a much, much stronger hand than he actually does. Because, again, the issue comes when you realize the implications of Triffin's dilemma, as well as, obviously, the results of it. The implication is that we need to send out dollars on net to the global economy to fund, basically, global trade. But the other implication, obviously, is that we've offshored our industrial base. And so if you're going to impose massive tariffs in the desire to move us back to an autarkic economy, basically an economy that's self-sufficient, that doesn't need to have maybe much import-export, that can basically provide everything that it needs just by itself, it's going to take a lot of time to reshore industrial bases, to retrain American workers. And then there's obviously the cost implications for high-end manufacturing, iPhones, consumer electronics, cars, et cetera. And that transition period could definitely cause a very severe recession. But even more importantly than that, obviously it would cause an unwind of a lot of these carry trade and pro-liquidity effects that have taken place with regards to this Triffin's dilemma that's been playing out for the last 30, 50 years. And so that means that equity markets and bond markets are going to fall, substantially. And I don't think Trump was ready for that amount of economic pain. And I'm not saying that, whether it's right or wrong that we should move back towards a more self-sufficient and more reshored industrial economy, or if we should let our manufacturers move overseas and basically ship away all of our jobs. But there's always trade-offs, right? This is a world of nuance. There's never anything simple. And so if you want to do that path, you're going to incur a lot of economic pain. And so, yeah, I think that 245% was just almost like a bloviating show move, if you will, that was just meant to scare people. But in reality, that kind of thing would not hold long-term if you want to basically retain our global monetary system as it is.
And I don't think that was ever the plan, right? Obviously he wrote the book Art of the Deal, which is anchoring, right? You go high, you settle low. So it opens the door for negotiations. I think a couple things in that as well that I think about is that Stephen Moran, who's Trump's economic advisor, wrote a paper before Trump became president, and basically coined the term Mar-A-Lago Accords. And so he sort of laid out this playbook that seems to be sort of what the Trump administration is following down now, this playbook into this Mar-A-Lago Accords. Maybe not exactly. I think maybe he's moved it more aggressively than was laid out in the paper. But I think also in that, so the 245% was much more aggressive. There's been a lot of talk about this potential game of chicken, I think, as you called it. I would agree with that framing, like this game of chicken, like who could go longer, China or the U.S.? Realistically, neither of us could survive without each other. I mean, it'd be very rough if we did, right? And I thought, man, I mean, China welded people in their friggin' houses during the pandemic. Like they can go through a lot of pain. Like the U.S. isn't going to put up with that, right? As of like yesterday and today, though, it looks like China is like caving like super fast, right? They already switched to easing. They're like begging for a meeting. It's looking like they want a deal pretty quickly. I don't know if you've been paying attention to that.
Yeah, no, and I'm not surprised that they do. While the CCP can maintain basically like, monetary and economic harsh conditions much longer than the U.S. can, it does not behoove them to do that at this current juncture, right? We've seen a Chinese economy for the last 2 or 3 years that's been in basically recession or a complete contraction due to the real estate and banking sectors starting to fall from their massive shadow real estate bubble that's been imploding. We saw the bankruptcy of Country Garden and Evergrande and several other large developers, as well as defaults of major property developers all across China, and their failure to pay dollar bonds, as well as onshore yuan bonds. And so the Chinese economy essentially has kind of reached this, I think, severe inflection point where they now need to choose if they're going to go forward with a path of deflation and let their real estate bubble basically burst in slow motion, essentially like 2008, or are they going to reflate the bubble and print the yuan and let the yuan devalue? And that's a difficult decision to make because either way, obviously, there's economic pain, but the winners and losers are different in each scenario. Right. If you choose the deflationary path, then obviously the equity holders and the bond holders are going to get wiped out. But you might be able to retain that yuan 7.3 to the dollar peg for a lot longer. And then if you go the other way, obviously you're going to see a blowout in your currency. But on the plus side, the exports become much more competitive. So China's been trying to show this strong face, right? This poker face. But again, if you look at, even the data, like I was looking at this yesterday, ever since 2022, they've stopped publishing most of their economic data publicly. If you look at youth unemployment, you look at factory orders, you look at new home sales and new home leases in China, all of the figures just won't be reported anymore by their version of the BLS. And so that tells me that things are pretty bad there right now. They just don't want the U.S. to know because obviously that would weaken their hand.
Yeah. Yeah, but it is a game of chicken. The way I see it is back to these Mar-a-Lago Accords was like, obviously put pressure on China. And I think there's, even in the Biden administration, was sort of this stance on China trying to put them back in their place. I think it's probably more from the intelligence community than just the Biden or Trump administration. But, Biden is the one that took away their ability to get microchips, for example, right? Advanced microchips, right, to limit their technology. And then started the CHIPS Act to start bringing onshoring some of that back. And when you think about that, tariffs are really about like more strategic moves, right? So it's like the U.S. doesn't need to make T-shirts and sneakers here. Like we gave those jobs up a long time ago, but it's like there are strategic things that we should be doing here, like, rare earth elements, having steel and copper so we could actually make things. And so I think there's like things that are strategic. It was never about bringing all the jobs back. It's like, what are the jobs that we need here? And let's just bring those back. We don't need to grow mangoes or coconuts. Like we can let other people do those things as well. And that seems to be happening. At a pretty breakneck speed. As a matter of fact, if you saw the latest GDP numbers that came out, right, we had a negative print, but that was adjusted for a 41% increase, a surge in imports. But when you looked at the investments that were going on in the U.S., Trump announced $8 trillion of investments going on in the United States. It looks like we're going into some sort of like a reindustrialization that we haven't seen since like the 1940s almost.
Yeah, I mean, I would hope so, right? Because again, the negative effects, right, the knock-on effects of the offshoring of our industrial base is pretty substantial. It's, pretty sad to see as well. Like in the Rust Belt states, one of the leading causes for death now is opioid
Yeah,
addiction.
terrible.
And depression and basically economic malaise is now kind of common young men, especially in those areas. And so when you destroy the ability of especially a large section of the middle class to make money and to provide for themselves, and you offshore that to foreign countries where they just do it cheaper, and they still don't treat their workers well, obviously, right, in Southeast Asia, that just demoralizes the people, and it obviously impacts the local economies, very, very severely. And so I think reindustrialization obviously should happen. But the question is, of course, like you said, what things should we bring back? And I think high technology, things that are critical to defense, lithium, copper, cadmium, things that are needed for battery and EV production, obviously. But like you said, agricultural products, certain consumer goods, we don't necessarily need to produce those here. So I think it's a balancing act. The problem with the tariffs as they're constructed now is that Trump, came out guns blazing with this tariff policy, thinking that essentially the U.S. was invulnerable, and then very quickly saw the market start to retrace. Right, we saw the 20-year and the 30-year bond hit 5% within like a week, and credit spreads start to blow out in early April, and that signaled to him quickly that things were not going to go as smoothly as he had hoped. And so he started announcing basically exclusions. So he said, okay, we're going to apply tariffs except for iPhone, manufacturing, and except for automotive manufacturers, and except for, X, Y, and Z industries that need to have their cheap goods in order to produce cheap finished goods here in the U.S. The issue with that is that this excludes small businesses, right? So small businesses won't be able to benefit from those exemptions that the large businesses are able to. And so that means that small businesses, if these tariffs are held in place as they're currently structured, the small businesses are going to be damaged quite significantly by the tariffs. And that's where I think Trump needs to make some readjustments in his overall tariff policy to make sure that small businesses and small business owners, especially small manufacturers of end goods, don't get walloped by these things.